Okay, well, let's get going with the trading room. It's a midweek update here, guys. It's the 5th of April. Past that, these markets are about as optimistic as the snow is here in Salt Lake City. So let me get to it here. I've got my 2 cents. We'll talk about it. If you're going to follow along, please take responsibility for the outcome. You guys get the idea. So let's do a quick market recap here. We are looking at a bull pullback this week, and that's all this is. We had a pretty massive surge from last week, showing some resilience in the stock market. The doom and gloom when it comes to the economic outlook, the slowing of jobs, inflation, and all that stuff is something that we have to live with every single day, right? That's going to affect the bottom line of the person that goes to work and has to buy groceries. The stock market is absolutely detached from that. I've had probably a very busy week when it comes to coaching sessions with some of the traders out there, and the ideology is, well, if we're seeing this and it's that bad, how come the markets are going up, and so on and so forth. And there is a massive difference to that. When we see that a company lays off workers, that's good for the bottom line of the company, and the stock will go up, which is backwards because you think, hey, you fired somebody, that's bad news, that person lost their job, it's sad. Well, it is. So understand that these surges and these moves are because of the economy slowing down. And I've got a summarized slide here, but we're starting to see it in those larger, stubborn numbers. The active retailer, the employer, people adding jobs, things of that nature. Well, this PCE number, which is what started it off last week. So if you guys weren't sure about the Friday class or missed it last week, I believe the majority of it was Powell easing 25 basis points instead of 50, and then the PCE number came in really cool, nice in contraction, showing some, and it really just stimulated the markets and they took off. We followed that up with a jobs number that's lower. We do have ADP that came out today, also lower, so we're starting to see everything across the board in the economic data slow, and it's really surged to the bull side with these markets. Now, that being said, it was time for me to clean house. I've got too many Post-it notes all over my desk, and I got rid of about half of them. I'm still going through a whole bunch of lists, but I figured I would just jot out a whole bunch of ones that that I like, the things that I'm looking at. There's some ideas, and it's going to continue when it comes to what's strong and weak. This market, the S&P, the Dow, and the Nasdaq, and this move to the upside is not necessarily a representation of what's really going on in some of those outliners. Take a look at the bear trades down there, folks. The industrials, materials, just mashed. But then again, the precious metals, technology, I'm starting to see a little bit of healthcare really move to the upside. So these sectors are very bifurcated, and they're not all moving up. There are some that are absolutely getting punished. And it is that long term, the idea of, okay, well, geez, Joe, if people lose their jobs and we have less demand for things, then it's going to affect some of these companies. And yes, what will it affect? Materials, industrials, things like that nature. Energy had its little hiccup because of the OPEC announcement last week, and I think that's going to play itself. There's still going to be a demand for energy to some point. But tech, all the darlings are back. Everybody wants to jump on the next tech thing. Everybody's moving back into that. Precious metals, if we're going to have the Fed that's going to slow down and indeed start easing. I've even heard rumors of rate cuts by the end of this year. Well, we'll see. Then you're seeing a move out of the dollar into precious metals again. And that's kind of what's going on here. These markets are ahead. They're trying to stay that way. So keep that in mind when you're making decisions. I don't pay a lot to the sectors as much as I have been lately because of that. You got a market that doesn't really make a lot of sense to you. Well, let's focus more on the markets. So I zoomed in here on Newmont. This thing was really smashed for a while. Rob brought this up on Friday's class. I wanted to bring it back up here because it looks good. Take a look at that breakout to the upside that it had. What's really interesting about that is this is the discussion we're talking about, this little bit of an ascending triangle pattern. I think Rob referred to it as a bullish flag pattern, and it absolutely is consolidated through here, and boom, it shot right up. Now, can you still trade this? Yes, you can. You can. It's just you're going to use 50 as a support level now, and you might not get to 54 before you consolidate below 52 and maybe revisit 50. Once again, I'll say it, my outlook for this week is a bull pullback. The markets are in an absolute standard bull pullback. Now, if we get anything, I don't know what we're going to have to get out of left field to be bearish enough to change that, especially in the NASDAQ. I mean, we absorbed a pretty aggressive bank situation very quickly. If there's more to come, we'll see how these markets take it. But the resilience is out there, so we have to just kind of treat it as such. So this flag pattern has triggered. It absolutely confirmed yesterday. Take a look at the size of that candlestick. But it could be an idea moving forward. Right along with the mining company, we've got silver. Silver also had a big surge to the upside. Yes, folks, it's all planned. And you'll see that all the bears have pretty much the same to the downside. It's just a big move into one thing and out of another. It's extended, sure, but I like the 22 support level for something sideways to up. Let me draw a little line here. Right across this area, you could see that it just pushed up here. This is what I like. I like the volume, the participation in this. Will it come back? Sure. Will it consolidate? Yeah, it might. It might play there. But targeted butterflies, credit spreads, bullish credit spread here might be pretty good. There's a few different ways to play it, but I do like it. And then ABBV. This one's a little bit more of a slow burn, and it is in the healthcare sector. I am seeing a little bit of strength in that. I'm seeing, once again, I go through all my old lists, and some of the healthcare stocks are actually hanging in there pretty good and slowly starting to climb, and this is one of them. It's not really jumping out of the pan, if you will, but I mean, look at this gnarly little back and forth. And 156 for the end of the month, and here we are pushing the 162 mark. Now remember, the high on this was back here at 166, and yeah, could it get there? Sure. It might mess around a little bit about the 164-ish level, so something diagonalized would be pretty good. Or if you don't believe it's going to get there and maybe retest this 156 area, yeah, you could play it along with the last couple I've been talking about. It's something that's going to correct or something sideways. So, like that one. Now, speaking of sideways, these do have directional capabilities, I should say, or intentions. I don't know what I'm saying here, but it could also go down or up. Let me get a different color pin. Let's do black. Okay, so I like the sideways because this floor is super strong, and it's been strong through the last part of last year, and it held in March, although it has played a pretty weird, interesting, catastrophic shoot up here and then fell apart. Why I have it on the sideways watch list is just because if it can stay above this 20-day moving average, there's a little bit of a move to the upside here, just a little stage. Once again, nothing to really push it up to 45 anytime soon, but to keep it above 30, sure. And this is rolling over along with the markets. The support's probably a little bit above that 30 mark, maybe around the 30. What do you want to call that? 32. So it does have a chance to bounce between the 35-30. If you wanted to play something a little bit more glass half empty, you see this roll over a little bit and get below that 20-day moving average. I'm cool with the diagonal put spread, a target around 30, or maybe a consolidation point around that area. So sideways overall, but if you wanted to put a slight bias to it, maybe to the bear side. Here's OLO. This actually came from this class a while ago. I do like it. It's pretty cool. Yesterday's action was interesting. It's in the correct sector, right? Technology, but boy, it had a rough patch that it just got over. Now it might come back down and revisit that, and if it does, then we have a problem. I know we do have a bearish crossover that happened, a little bit of a surge to the upside, but it failed, right? This candle you kind of have to throw out because it failed, and what I mean by that, well, it gapped all the way down here and couldn't even really retrace to that previous close. So the price action is below the 50, so it's a little bit more ominous. The reason why I'm showing it to you is because we have a support level here, and we also have an area that it might consolidate at right around this area. I also gave it a little bit of a, okay, it could hang in there because it's in the tech sector. There's my thought process. Now, I'm not going to push the button until I probably see something revisit this 725 mark, this level here, because I want to make sure this didn't just shoot up and it's going to roll back down. Now, if it does, we have another opportunity for a diagonal put spread sideways to down. The other one on the sideways, obviously, this is Ben. Now, Ben was actually on a watch list from a while ago to the bull side. Yeah, January. And it worked out. But it's in the financial sector, and it had a little bit of a, we all know what happened over the last couple of weeks. So where does it sit now? It's right back to where it was in late 2022. It's consolidating, can't get its head above the 27. We do have the crossover, but I mean, it would have been nice to play this thing sideways since the mid part of March. You'd be doing pretty well. You can always open these up. It's got a dollar range here, 27 to 26. I'd be okay doing something 25, 28. It just depends on how wide you want to let this go. Understand the wider you go, the higher the probability. The money might not be as nice, right? You won't bring in as much money unless you go a little bit further out. So a couple of sideways to look at. Now on the bears, I had a ton. And they're almost all of them industrials and materials. Almost all of them. So let's go through a couple that I liked. The last few days on Rider Systems here has been pretty cool. I mean, it's just rolled over, and it's not forceful selling, more of an abandonment. And why I like to say that is the volume here. First little bit of a pivot here, good shoot to the upside. Bearish crossover looks good. Rolling over the price action, we've got some support levels here. I'll try to draw a line all the way across here. Obviously, levels of support and resistance that it's toyed with just below that 85 mark, maybe about 83. And it just seems like it's on its way. This might be something that we might see here tomorrow because it's going to fall pretty quick. So vertical spread, putting it on today might be cool. Even if you do get this move to the upside, it might just roll back over. Why I like the vertical spread is because the volatility is probably super high on this. Take a look at the last 3 days. That might be really messing with the price. You could see how it just down, and then gap down. So the volatility is probably pretty high if you go straight puts or diagonals. Vertical spread might be something cool for the shorter term. But I do like that. Sideways, probably something that's ready to go today. So here's Etsy, consumer cyclical. This one looks like it's hanging in there. This has been on our bear watch recently. I think it last week, 2 weeks ago. Yeah, it had a little bit of a rally, I believe, this last week. But I do like how it came up here and hit this. It seems to be tapering off a little bit. So let's see if it can just pick up momentum and move to the downside. It's in the consumer cyclical. Retail should, and this is my outlook, slow as the economy slows. It will be late to slow. So we see job openings slow down, unemployment will increase, and the consumer will start to get less active. And what I mean by that is we'll start to see some of these consumer cyclicals really get hurt, mostly on the retail side, or at least miss some numbers. Now, that also could be compensated with by firings and store closures and things of that nature. We do have earnings season kicking off here pretty much next week, but I think we're deep. That'll be from previous quarters, so some of these should do pretty decent. So if you're worried about that, just sit on your hands for a while. But it's a good one. It's on my list just to watch. And then the last one I'll show you is ADT, but you guys saw that list there. You can rewind the video and write them down. There's a bunch of them out there. Industrials, there it is. Industrials and materials. ADT's been on and off our bear watch for quite a bit, and it's just doing its next stair step. You guys have watched this video more. If you watched my Wednesday class more than a month, you've probably heard of it. But what I mean by that, here's your little stair step, comes down. Here's a stair step, comes down. Here's the next one. I expect it to roll. So straight put might be the best thing to do. Percentage-wise, it's going to be pretty big. Just position size for max loss. Just save you guys a bunch of pain to do that. All right, so let's get into the market analysis. And so far this week, it is it's that rollover. And what's interesting is the diamonds actually hung in there, and it had a pretty good pop. You'll see the charts in a minute. But the SPY is down about 0.67. This is just for Monday, Tuesday, and Wednesday. I always like to say that. NASDAQ obviously getting hurt the worst because it had the biggest move to the upside. The Russell's smushed a little bit, down 3%. Those are a lot more volatile. That Russell index is super volatile. Oil Obvious reasons when the SPIC gets a little bit of flight to safety when it comes to energy, worried about the slowdown. Gold 2.45% as the dollar slides. This is really basic. It's really cool to see in the tea leaves that the optimism in the markets and the expectations of a slowing rate increase and or even I hate to say it, but a rate decrease at the end of the year, people take out of the dollar at strong and putting it back into something a little bit more defensive. All right, well, let's get into the charts. Yeah, okay. So I was talking about it a few days back, and it looks a lot more, it makes a little bit more sense now, doesn't it? That you see it here. This is what I was talking about right here. But my outlook is because of this. So it's pulling back, it's outperforming. In light of the banks, it's still pretty strong. Yeah, it's glass half full here. The diamonds. Here is the diamonds. It is above its 50-day moving average, right? So if you're trying to flag pattern this, it'll work, right? So it's shooting up. It's above the 50-day moving average. It's looking a little strong, even though, once again, the industrials and the materials are showing a lot more weakness. I think it's energy that's probably really pushing this up. So we'll see. So keep an eye on this. We'll see where it goes. As far as all three of the majors, this one I would be the most bearish on, and it's kind of funny because the diamonds itself doesn't show that it's very bearish, but it is. The sectors are, at least. Okay. Let's move on to the Qs. Here comes the Qs. We've got this breakout above here. Now, this thing is channeled. So we are in more of a channel than we are a corrective flag pattern or a pullback like in the other two. But look at this, absolutely breaking out, a little bit of a pullback, coming back down. That is absolutely at a support level, completely. So there we go. What I like about this is if you're patient enough, then you can sit back and allow some of these, some of those high flyers that I showed you on the watch list or something that you guys might have. And just be patient, wait for it to pull back or consolidate, and we'll see if there's a resilience in these markets if they do pull back and bounce. So, all right. So let's get into the economic reports. And this, I believe, is what's really caused some of the stimulation in these markets, at least my opinion of them. And what it was the PCE. It's not here. It was last week, but this was pretty interesting. First job openings drop. Then a bigger one. This one I'd focus a little bit more on. This is the ADP non-farm. We've seen this one actually go higher in recent. So expecting from 261K down to 208, and it dropped even lower than that. So job openings are starting to contract. That is the correct direction. Now we already had manufacturing that's been dropping for a while. Here it is again. Prices and the price purchase managers index. They're both down. It's continuing to go south. So things are going the way that the Fed needs them to go for them to take their foot off the gas. And the markets are kind of, I think it's funny, the markets are out there saying, I told you so, I told you so, I told you so. So there they are. What do we got for the rest of the week? Not a lot. It's super light. But we do have, where to go? Unemployment. So this will be the next one. And this is supposed to be an uptick. This was under 200K last time. We'll see if it gets to this or higher. That will be pretty much that last domino to fall to get a true run the gamut. Everything is contracting. And I don't know what that'll do. It'll probably make the markets just explode and go get excited. Stuff like that. I don't know. Cool. All right. So let me pull the class and find out what you guys are thinking about. Let's do the weekly outlook first. And we got a 0 to -1. Okay. Okay. Makes sense. I like it. Let's go ahead and hide that. And let's do our monthly outlook. All right. Back up to 93% voted. Let's go ahead and close it. That was fast. All right. 46% -1, 31% -2. Okay, so the monthly outlook is a little bit more bearish than the weekly outlook. All right, so is this the beginning of the end? Some of you believe yes, and I know a few of you out there. I have a couple of perma bears on this class. You know who you are, so I get it. Interesting. hey, I like it. Thanks, guys. Appreciate that. All right, so I'll go ahead and show you what I'm doing, and it's pretty much the pullback. My monthly outlook is a +1, and it's difficult, but I'm at a -1 on the for the week because I think it's just a pullback. We'll see how far it goes, and then I'm +1 because of the fact that we are above those slopes. Okay, let's get into the sector analysis real quick, and then we'll jump on out and take a look at some trades. So, weekly performance, energy, healthcare, utilities, surge in the energy side, financials, industrials, basic materials are flat there, you can see, but boy, kind of really not doing very well. Let's take a look at the charts. So, energy is strong because of the gap. That's it. It's just the worries, the fear, the flight over to, OPEC's going to shut everything down or tighten up the spigots. We're worried about it. And this is what happens over the weekend, right? Since then, we've been coming back down. Overall, not the strongest pattern, is it? It is above the 50-day moving average after one shot to the upside, right? But it looks like it might melt back down. So I've kind of stepped away from that. It's a little too volatile for me. I'd rather play something in the industrials and the materials when it comes to the bear side, and something in technology to the bull side. Let's take a look at the weakest sector. This is the industrials. I had them labeled wrong. Sorry, folks. The industrials downtrending. This looks really nice as a bear, and this is one of the strongest. Can you believe that? Or this is the weakest, excuse me, because we had that big sell-off yesterday. So we had a pretty good bounce, a good surge. It followed along with everything, and then it just rolled right over. Maybe it's because of the weakness in the economy moving forward, the spike in energy, which would create, I don't know, all sorts of increases in costs when it comes to manufacturing and industrials and materials. So, but I do like this as a trade. I do like how it's rolled over. I like the target here at 96. If it can get below this 98 level, which it looks like it's on its way pretty quickly, this might gap as well. All right, let's get to the conclusion, and then we'll go take a look at some stuff. So the markets are getting the signs of slowing it was looking for. It's kind of, hey, I told you so. It was going to happen. The markets were kind of ahead of what's happening, and all of a sudden, here it is. So it's creating the anticipation that the Fed's going to change their rate policy. That 50-50 chance of them raising in May is now, the markets are feeling it might be 75% chance that they don't raise in May, right? So I don't know. We'll see. Earnings season kicks into gear next week. Let's see how investors deal with numbers specifically. If these companies come in and, hey, we didn't do very well, and let's see if they get sold into, or if this is just a darling purchase. Everyone in there doing kind of what they did in January. Let's jump into the stuff that's hurting really bad, and even if they have a bad quarter by the end of 2023, things will be great. It'll be interesting to see if earnings results actually affect how the stock or the sector itself trades. But keep in mind, if whatever trades we looked at today or what we're looking at, you want to check for earnings. So sentiment out there is absolutely opportunistic, and it's bullish, and it has been for quite some time. We've seen some of the darling stocks come off the bottom and some of the stay-at-homes. I've seen a big move in the FANG stocks. If you guys seen Intel, Oracle, well, I guess Oracle's not a FANG stock, or Intel, but things like Netflix, Nvidia, there's anything that's in the news is still pretty hot. So opportunity is there, whether it's high priced or not. Try not to fight that if you're a bear. That's probably the best thing to take away from there. Economic data, we finally got the contracting moves into the PCI, and that started this rally as of last week. Job openings was weak yesterday or 2 days ago, and then the ADP employment number today was low. Jobless claims is tomorrow. If that also lines up, I believe that's the last domino to fall when it comes to employment, and that would probably further the markets to the upside, I just imagine. Okay, let's go take a look at some trades. And I see you guys are also typing in some trades to look at, so continue to do so. Let's start here with the SPY chart. When I was looking at, why do I have an outlook of -1 and plus 1 for the month when it's only above the, just barely below that 50-day moving average? But it does have that crossover, and it does look a little bit more pessimistic than I would like when it comes to that. So let's see if this 405 holds, and if it doesn't, we go back to this 400. Okay, then you guys that are longer term monthly bears might have a little bit of an argument, but it's this hiccup here that I think has created the biggest sentiment change for me. If that surge at the end of last week really just flipped me from bull to bear. I mean, from bear to bull. So, hey, thanks for the heads up, folks, on the chart, because I wouldn't notice. All right, let's get to your trades. What do we got here? T-Mobile, okay. T-Mobile was a sideways trade, I believe, isn't it, from the Friday class? Let's see what John's got it as. He's thinking a butterfly spread at 145. Am I getting that correct? Yeah, 145. Let's do it. 145. Whoops, 140 and 150. Is that right? Yes, for the 21st of April. Yep, and this is jot up a little bit. We talked about this. Let me zoom in on it first. We talked about this on the weekend class, I believe, Rob and Darren, and I liked it, but it just participated in what the markets did and just shot up. Still means, I mean, it still could come back down. One day is just one day. But let me redraw where you're at. Oh, now I'm in between strikes, but that's okay. There's about the 145. Here's the 150, and here's the 140. Oh, sorry, that 150 45 is not exactly right. There we go. How about right through here? So yeah, it's shot up a little bit. It doesn't. I mean, it could roll right back down. It's got a little bit of a bullish pattern going on in the shorter term, but this is kind of what everything else is doing. So if we indeed get the rest of the week's pullback, it could work its way down. Boy, let me do this since I talked about earnings. Let's see where we're at. No, I haven't checked it. Or Finviz isn't really giving us the up-to-date. It's February, so we'll see if this has got it coming up. But it did shoot up. So T-Mobile. And what else you got here? John's got Take-Two Interactive. Let's look at this one. What do you got on this? He's got a bull call spread, 120, 125. Okay. So the tech sector or communication services, same idea. It shouldn't really separate those, right? 120, 125. Back here, I zoomed in a little bit, but you could see there's a pretty good landing zone there. Look at this ascending triangle pattern. Yep, I like that one. That's a good one. Let's put that down. Now that I've gotten rid of all of my lists, I need new ones, right? Okay. Who's next here? Joel's got, speaking of the FANG stocks, right? Netflix, right? NFLX. Isn't Netflix the N in FANG? I don't know. I thought it was. And I imagine this is going to be a bear trade for Joel, right? Bear put for next Friday, 337 and a half. 330. Going for 750 here, huh? Let's see. Right about there. 330 is right about there-ish. Okay, I like it. I like it. It's rolling over. You do have support here. You do have a 50-day moving average. But if this is indeed going to roll over, you're just playing almost a bull pullback is what that is to the downside. I'll keep an eye on that. The one thing I'd like about that trade, though, Joel, I'll give you this, is, and you know I'm not a very counter-trend person, but with that lower high, it's almost not really a counter-trend. The only thing that sucks is the fact it's above the 50-day moving average. That's kind of the only thing that bothers me. But I like the trade. Let's write it down and watch it. NFLX. What's cool about the vertical spread is you have a finite risk, and you've got... all you have to do is sit there and wait. And that was for next Friday. Okay, week and a half, right? Let me pull up my calendar and make sure I got that right. Yeah, so the 21st is the expiration cycle. This month, he's going week 2, the 14th. Thanks, Joel. Just kind of a thought. This is from Brett saying that, I understand the sentiment is overall more bullish, but I'm finding a lot more bears, and so am I. You guys saw my list. I've got a lot more bears there. And the opportunities, he says, even a lot of stocks that I'm finding that are currently bullish seem to be hitting resistance. Yes, they've gone gangbusters. And what the biggest issue is this is a good talking point, is how fast these markets want to go up. Usually, you get a market that when, let me get this, where'd it go? I'll use NVIDIA, even though it's pulling back today, I believe. Usually you get the opposite. Usually you get the markets fall really fast, and then they slowly climb, slowly climb, slowly climb. And then they take off, and then they slowly climb, slowly climb. It's the opposite with these markets. Have you guys noticed that? Geez, let me find something. Oh, well, let me just put in the Qs. That'll be an easier one. Anything that you can think of that participated. And it's very difficult to trade this. So that's a gap. That's a gap. This is just a huge candlestick. And this is just on the Qs. And then you have 2 days that are rolling back over. This is hard to trade to the upside. This is incredibly hard to trade to the upside. Right? Look at these. When it comes off the bottom faster than it falls. And I'm just using this in general. There's probably better examples out there. So yeah, you're right. So when we get to these classes, I like to say, hey, sit on your hands, wait for it, see if it can consolidate. What I'm excited for is this is a pullback week, and if we can continue to get a uniform pullback, and maybe it hits the 310, and then we start to run, yes, I'd like to catch it on the next move to the upside. So I feel your pain, Brett, and you're seeing it exactly the way that at least I am. I'm sure everybody out there is having a tough go at it. All right. ADP, looking for a close below 210-ish, mainly to new lows. Sure. ADP is also on the watch list. Yeah, I like that. If it can just roll over. Let me see if I can move that up. Yeah, that's a good break. See if we got a target back there anywhere. No, this is new. Yeah, I like it. Let me put it down on the bear. I don't think we're going to get too many today. I had a pretty good list, and take from Friday as well. We'll see. The unemployment number comes in higher. We might see the markets turn and just take off. So I'm hoping it's in line and these markets can continue to pull back. Might make things easier for the next move to the upside. Friday, Good Friday. Oh, I forgot. Okay, we do not have the markets open Friday, do we? Okay, so we've only got a day and a half. We'll see where they go. Let me go ahead and see where we're at right now. And let me type this up and I can cut you guys loose. We only have a couple to look at. Well, I guess it's not going to be too active of a week. That's good. I wasn't planning on being too active this week. So look at this. The Dow's hanging in. NASDAQ is just giving it up. Down 1.5, and then the S&P's halfway between that. Isn't that funny how uniform it is? What had the most to give up? The NASDAQ. What second? S&P. What got hurt? Dow. It's flat. So nothing's changed. They're all just pulling back. All right, let me see if I can get a couple of these trades in here. So another short list. 2 days. I think last week we had the spiders and something else. Comcast. That's it. Here we have 3. That's all right. I'll keep bringing more and more as I keep going through my lists, guys. But I'm just waiting for something to trigger. I'll take either direction. I'm leaning a lot. Obviously, I got to lean more towards the bull side. Just that surge that we had last week put us well above those, for me at least, when my top-down approach to where I got to flip gears from pessimistic to bullish for now. All right, guys. Thanks for your participation. No markets on Friday, so it's a short week. Enjoy the holiday. And if you need us, you know how to get a hold of us. Thanks, guys. Talk to you later.